One of you asked a question about how much tax is due as a result of a 401k withdrawal, and I thought this might be a good one to answer with a video. And that's because many of you are going through the same things or will be going through the same things. So this can be helpful for lots of people. I've kind of boiled it down to a couple of bullet points and want to show you how I might think about this and how I might start getting answers to the questions. And by the way, this is a bit of an experiment doing viewer questions. So I'd love to hear what you think about it, and please check the description to find out how you can submit your own questions. Please don't email those. There's going to be a better way to do that. So the question is, the person took a $100,000 withdrawal from the 401k. We're going to guess that that's the gross amount they took, on top of an income of $70,000. There was a 10% contribution to the 401k. We're going to assume pre-tax and a standard deduction. This looks a little bit low given their age, but we're just going to go with it. There is no other income, and there was 20% withholding. So the question is really, what will this person owe? And might this affect their Medicare premiums when they write IRMAA, the IRMAA, the income-related monthly adjustment amount? Are they going to have to pay extra each month in Medicare premiums? So there are a couple of ways to answer this, and that might even include using a spreadsheet or a sheet of paper and figuring out how much income tax is due for each of those marginal tax rates. But there are easier ways to do it. So there are plenty of free online tools that help you calculate taxes, or you might have a DIY tax preparation program that you use and you trust. That would be an excellent option. I've got some software that I can use. But anyway, if you have some automated tool, that's going to ease the process for you. So let's start by looking at dinkytown. This is a free 1040 tax calculator that you can find easily if you Google it. And I've entered some of their information. We're assuming married filing jointly. There's $63,000 of income that would show up on the W-2 because, again, there was $70,000 of earnings, and then 10% or $7,000 went away as a pre-tax 401k contribution. Again, we're making some assumptions there. Then we've got the taxable IRA distribution, $100,000. Again, we're assuming that's the gross amount. So they only got $80,000 after that withholding. If we take the $100,000 plus the 63 of earnings, there's a total of $163K here. They are over age 65, so their standard deduction should be a bit bigger than what they said, but we're just going to stick with the numbers they gave us to keep it simple. Those of you who are over 65, keep this in mind. You might get a little bit extra in the deduction. So if we take all of that, we find they might owe just over $20,000 of federal income tax. And by the way, they calculate an effective tax rate for you of about 12.5%. That's based off the amount that's due. You take this $20,000 and you divide it into the total income of $163,000. That should be 12.5%. Now, some people would say that you should calculate the effective tax rate off just the taxable income. But in this case, they've used all of the income, so you can quibble about that if you want. But anyway, the amount that's due is going to be just over $20,000. Now, the person mentioned that they had 20% withheld from their 401k distribution, and that's normal. So in many cases, when you get a cash distribution directly from a 401k, there's 20% mandatory tax withholding. It's just a requirement. That's not the case if you pull it out of an IRA, for example, but if you use a 401k, you should expect that 20% mandatory withholding. So they have already paid in about $20,000, and their total federal tax due is just over $20,000. Now, this tax calculator is not perfect. None of them are. So you would want to double and triple check this with some different sources. But if we go by what this is telling us, this person might be in reasonably good shape so far. And by the way, how does that get calculated? Well, as you may know, we have a progressive tax system. So some of your income is taxed at 10%. And then as the income rises, then that's going to increase in rates. And so the way they get that effective tax rate of about 12.5% is they calculate all of that for you. They bundle it all into a total amount due, the $20,000. And then again, they divide that into the total income. And we don't know exactly why they needed the $100,000 to come out of the IRA, but I would mention that just based on their earnings from work, if they don't need that money again next year, they're in a relatively low tax bracket. If they're married filing jointly and below 89,000 here, they may just be in the 12% bracket. It could make sense for them, maybe not. It could make sense for them to take some more money out next year or do some Roth conversions while they're in a relatively low tax bracket. I don't really know because I don't have the details. Maybe it doesn't make sense to do anything, or maybe it makes sense to do quite a bit more. We just don't know. But I wanted to mention that because they are in quite a low tax bracket this year and presumably next year as well. And again, that assumes we're just talking about the earnings from work. And of course, those IRA distributions would go in addition to that. And then double checking with taxformcalculator.com. Again, I don't vouch for any of these. They all may have some benefits and some drawbacks, but they are interesting to look at. I did the same thing, 63,000. That's after the 401k contribution plus 100,000 of the IRA distribution, and the federal tax due is a little bit over $20,000. So we'll get to IRMAA next, but hopefully this gives you a teeny bit of insight on how you might look at this and how you might think about the question of how much you're going to owe. Of course, you won't know the actual amount until you really file a return, but this can give you some guidance and help you figure out how much money you might need to drum up or have available in cash. Again, we have oversimplified it. We've ignored state taxes, and we've made some assumptions that might or might not be correct. So keep that in mind. It's just more of a framework of how you might look at this. The question also touches on IRMAA. And so they're wondering, are we going to have to pay more each month for Medicare premiums because of this increased income? And it appears that the answer would be no in this case. If we assume that they're married filing jointly, then they would be below that first threshold. They're getting sort of close, but they're not super close. So in this case, they should be okay. Now, we don't know the exact amounts, but what we have is the latest numbers, and this happens to be for 2024. And we might generally assume that those numbers are going to increase each year. We never really know because there's a 2-year look back, but it's reasonable to assume that the number would probably stay the same or increase more likely. So I think they're going to be okay on that. So I hope you found this helpful. If you did, please let me know that by hitting the thumbs up or leaving a comment. And if you want to ask your own questions, check in the description to see how to do that.